So good morning. What better way to start the day than a 15-minute overview of the future of digital tax. I hope you'll enjoy it. I'm here for Sovos. We're a global software company in the tax compliance space. And my role is to try and understand the future. So I work a lot with both tax administrations and businesses to understand how the two of them can work together better and both benefit from the technologies that we both have today and the ones that are quickly coming up as we speak. So time is relatively short. I'm first going to just set the stage a little bit, but still real quick. We're moving from a world of tax that has been relatively slow moving, and I'm mostly talking about indirect tax here, but I guess this is true for all sorts of corporate taxes or taxes that affect the business world. We're moving from a world of interpretation and declaration, which is very human-based, to a world whereby tax administrations try very hard through legislation to remove humans from the equation. That's an important takeaway from this presentation. Tax administrations actually like automation even more than businesses do because it makes data objective. An objective observation of economic activity is what this is all about. I often go around telling people it's all about the truth is in the transaction, right? The difference between you telling me that this is what I think I've done in the past month in terms of my sales and purchases versus a tax administration being able to see your transactions in real time is all the difference. And this idea of following transactions in real time and following business activity in real time was born in Chile just around the turn of the millennium. And so electronic invoicing, as we often talk about, I think it's kind of a limited view of the world, but electronic invoicing and similar, what we call always-on tax requirements, did not exist in the year 2000. In the year 2015, the whole of Latin America and countries like Turkey already had mandatory electronic invoicing. In the year 2020, in terms of landmass at least, probably about half the world already had similar legislation. And it is our expectation, and by the way, this is a conservative map, that pretty much all countries with value-added tax or similar taxes in the world will have shifted to always-on tax. And that's a major shift in terms of how businesses work, not just how they work with tax, but also how they work with accounting and with business processes. First of all, this is a very important picture, and I'm sorry it came out so small on the presentation, but this is an actual audit screen from an actual auditor in a state in Brazil, in the south of Brazil. And if you can see the detail, it's like a spider web, and in the middle of the spider web is a company that an auditor is looking at in real time, following their transactions, and the circles around that are their trading partners that can actually follow all invoices that go through their systems from both sides in real time. But not just the trading partners, 2, 3, 4 steps into their supply chains, all of the real-time transactions can be visualized, and if there's any anomaly, it can be seen immediately as a red circle. And there are telephone numbers against this. So the tax administration will actually call people in real time with questions about invoices that are in flight, right? Which is a huge challenge for businesses. We often think about this as being all bad, but this data from transactions is being used for good purposes as well. And this is just a quick example. About 2 years ago, there was a massive problem, an inundation because of global warming in the same state in Brazil. And they used invoice data from real-time transactions to try and pinpoint the areas that were the most affected so that they can send help to the right places. Right? So this data is much more than just tax data. And I have a fun couple of slides if you're into technology and if you like artificial intelligence. If you just imagine what governments are doing with the data, think about a business transaction that you chop into little pieces and you put it on a neural network. You can then very quickly start to compare all of the interactions and interdependencies between all of these different steps in a business transaction if you follow it live. And any anomaly in any of these steps, cross-comparing every single one of them, can give the tax administration insight in real time as to things that might not add up. Right now, you can imagine that this is interesting for tax administrations, but it is actually interesting for any part of any public administration. So this is where things get interesting, right? And I have very good live examples of tax administrations telling me, we were working on this project and then somebody from the competition authorities next door walked past my office and looked at my screen and went, what, you can see all this in real time? Right? And so the competition authorities, the central bank, the environmental agency, you name it, pretty much any aspect of public policy can be improved by having access to real-time objective data about business transactions. What that means is that electronic invoicing and always-on tax are just the beginning of a massive revolution that will affect businesses in much bigger ways than just tax. What we will first see is that there will be more documents added to the tax requirements, much more than just e-invoicing. There will be more and more data per document. My favorite example is in Brazil. The nota fiscal is 2,700 fields, not just all mandatory fields. Those 2,700 fields in a structured invoice are not there for finance or tax purposes. They're there for other public policy purposes, right? So other parts of the public administration are taking advantage of this data, and therefore more and more requirements will come your way. And also more and more systems, this is also too small to see, in your accounts payable and your accounts receivable will be impacted by these types of requirements. What that also means is that if you are being scrutinized, audited in real time, your ability to make mistakes decreases, the risk management equation changes incredibly. Every small mistake you make can have an immediate operational impact on your business, not just from a tax perspective, but the tax administration can actually stop your transactions, stop your physical supply chain in real time because something doesn't add up. What that also means, I'll come back to that in just a minute, is that all of the declarations where you sent a declaration, a VAT return to the tax administration, for instance, will be reversed, and I'll come back to that in a minute. And that means that also the burden of proof changes, right? The tax administration will hold your data, your authenticated data, and if you disagree with it, you're the one who has to prove that they are wrong, which is a huge shift in the way that tax has worked historically. So I talked about the 2,700 fields in Brazil. I'm going to skip this slide in the interest of time. But I also want to say there is another revolution that is happening in legislation that is very much related to this and that will impact businesses even more. Here in Germany, you're already quite familiar with it, I think. And that is that as more and more parts of the public administration want more and more of your business data in real time, they're going to pay more and more attention to how you exchange data with each other, with your suppliers and your buyers. And the whole intent of regulating the way that you interact with or you exchange data with your trading partners is all based on the idea that governments want high quality data. And this kind of a trick you have to understand here is that most small and medium-sized businesses, which often is 90% or more of economies, still key in data into private portals, right? And that is something that tax administrations and public administrations have realized leads to really bad data because there's manual intervention. They want to kick out the manual intervention, and therefore they're pushing towards open networks. Open networks whereby every company, no matter how small, a mom and pop store, a bakery, whatever, are their own independent node on a regulated network of networks so that everybody can automatically exchange invoice and other business data with each other. So that means that private networks, as we have known them, are going away. Supplier onboarding or trading partner onboarding onto your private network is going away as a routine, as a business activity. That is very important to understand. So we have these two axes. Sorry, this is going a little too fast. We have these two axes of legislation. One of them is the relationship between the tax administration and the taxpayer. The other one is the regulated relationship between suppliers and buyers in any economy. And if you look around the world, you will not find two countries that have even remotely similar legislation. They're all heading in the same direction, real-time data monitoring, but every single country is fundamentally different in the way that they're doing it. The level of complexity is just mind-boggling already, and this is of course all coming to Europe as well. In the interest of time, I'm going to skip some of these slides because I actually fear that we have a deck here that is a little too long for the allocated slot, but it's just to say there are country differences. No two countries are the same. There are some regional trends that we can look at. Right? Latin America is probably the most advanced here. If you have business in Latin America, you're probably quite familiar with this. Europe is definitely going in this direction with that in the digital age. Asia is heading in the same direction as Europe as well. North America is a little different because there's no value-added tax and therefore it's not driven the same way. So think about this as businesses having to play multi-dimensional chess. On the one hand, you have this mind-bogglingly complex set of rules and regulations coming at you, both for the exchange of data and for real-time reporting. And on the other hand, of course, you have technology that is changing at a crazy pace with artificial intelligence and many other things coming at you that you have to take advantage of in order to not fall behind your competitors. Like, one of the important things that we always talk about is, as a business, your strategy cannot be just a plumbing response. You can't just think about this as, I have to do these things, I'll give them to my IT department. Right? So if you have transactions and periodic returns and things like e-audit, standard audit file for tax, if you've heard of it, that go to the tax administration, they normalize the data, they will triangulate the data, and they will do these things that I've talked about before, which is real-time audit, like spot audits, and pre-filled returns that I'll come back to you in just a minute. If you have a fragmented response to all of these different types of requirements, it will be impossible for you to respond to these requirements from the tax administration. Many more countries than you think are already heading towards pre-filled tax returns, which puts your entire indirect tax practice, your compliance practice, upside down if you're not careful, because you will be receiving the tax return from the tax administration, not the other way around. So what we are saying is your strategy should be a strategy based on the meaning of the data, which is the starting point, the vantage point of the tax administration and the public administration is large. You have to start thinking about this as a revolution that seriously, structurally impacts your business, whereby all of the different reporting streams to the tax administration, to the public administration, are combined in such a way that you can normalize the data across all of these two and have the same level of insight in the data at the same time as the tax administration itself, which is something that we've started calling mirror visibility. If you use that as your design principle, you can actually get through this revolution in a way that is also beneficial for you, because this becomes a very rich source of normalized, structured, high-quality data that you can use for other business purposes too. Right? So what I'm saying is, you need both your transactions, electronic invoicing, continuous transaction controls, whatever you call that, all of your filing and reporting and things like SAFT and e-audit, plus your tax determination, all in a single platform in order to make sure that you can guarantee that you have the same level of real-time insight as the tax administration, that you continue to have mirror visibility and can respond to these kinds of reactions that you're getting from the tax administration. Real quick, most of the RFPs that we receive suffer from what I call the Swiss knife syndrome. Just because there are requirements for electronic invoicing or digital tax doesn't mean that all of a sudden you can or must change all of your practices, throw out your business software, and start from scratch, right? And so we get these RFPs from companies that say, now that we have an e-invoicing requirement, can you please do all of my AP automation, all of my AR automation, and all of my compliance globally through one vendor? I can tell you right away, that does not exist, and neither should it, right? These are very different areas of practice. On the one hand, compliance is a minimum condition for you to exist as a business, there's no doubt about it, but business efficiency is not something that you should throw out of the window just because there are requirements. Business efficiency is a precondition for survival and for competition. So you need both. Right? You need to really think about the ecosystem as a rich set of vendors with their specialities, with their offerings that need to loosely couple with each other, be integrated with each other, so you can benefit both from all of the experience that your ERP, your AP, and your AR vendors have in increasing your efficiency and your effectiveness using modern technologies, as well as integrated with that the best you can get from companies like Sovos in terms of tax compliance. Integrated with each other, but not all from the same vendor, because again, that doesn't exist. You will get the worst of both worlds if that's what you do. To wrap this up, A couple of recommendations for how you can both survive and thrive in the world of always-on tax. The first one is this move towards open networks, and you will have heard about PEPL, I'm sure, here in Germany and in Europe. This is a big driver of a regulatory push towards open networks. I talked about small businesses being their own node on a network of networks. Everybody being able to easily discover each other on the network and easily exchange data in a standardized format with each other is a huge opportunity for large businesses as well as small businesses to cut costs and increase efficiencies. So don't go around now looking for networks, looking for vendors that will onboard your trading partners. Because in the future, you don't need to onboard your trading partners the same way, at least, that you did in the past. These networks basically give everyone the opportunity, also your very small suppliers and buyers, to have their own automated systems, their own independent automated ability to exchange data with you immediately. Think about mirror visibility. This is such, I cannot emphasize enough how important it is as you go forward and you think about the future of tax and the future of digital transformation in tax, in government, and in businesses. Mirror visibility should be your North Star. You need to be able to see what the public administration sees when they see it. Otherwise, you cannot respond. And that has many architectural consequences, right? A fragmented response to all of these kinds of requirements in your systems, in your processes, geographically, across your lines of business, where you cannot normalize the data and see across the data in real time, will get you into tremendous amounts of trouble in the future if you cannot do that. Also, I mentioned loose coupling. Make sure that if you go out and you want to buy software for compliance globally, because most businesses now have understood that they would like to have one vendor to shield them against this violence of ongoing government mandates, think about an ecosystem approach. Right? Think about a modular approach whereby you can keep the software that you choose for business efficiency, but make sure that that software has the ability to integrate compliance capabilities from specialized software vendors in a completely organic, predetermined, pre-integrated way. And finally, when you do all these things and you do them right, and when you get the same level of data, the same quality of data, harmonized with the same visibility as the public administration, you will all of a sudden have a pool of data that is more detailed, higher quality, and available in real time that you can use for so many other purposes in your business. Board reporting, financial market reporting. You will have a dashboard across your entire business in real time, the same way that the tax administration has the dashboard that I showed you earlier. So decoupling, we believe, is a strategic imperative. We believe that it is very important to think about all of these developments on a very strategic level. Don't just go, I'll give it to my IT department because there is a e-invoicing requirement in Germany or in Belgium or in France. Think about this as a massive transformation of the way that businesses interact with governments. Think about it in a way that, how can I take advantage of that and how can I continue to stay in control of my data? And that means that you need to make sure that you can consolidate all of your tax compliance software, or at least normalize the data, maintain mirror visibility, and build on from there to become more competitive. I don't know if there's time for questions. Otherwise, no? Okay. There is no time for questions, but I'm around.
Thank you very much, Christian. This is for you, your applause.